Hello and namaskar traders. Good evening. 3rd of November. This is a Thursday evening, 8:24 p.m. Indian Standard Time, and we have a decent close to the Indian equity markets today. We will analyze that. Nifty, Bank Nifty. We will take a look at the IT stocks which drag the overall markets down today, and we'll take a special closer look at Infosys. But first, Nifty. Three different time frames in front of us, as always: weekly, daily, and the 75-minute time frame. And yesterday we discussed that Nifty is relatively stronger. It did open weak, and what we have and what we can call today's trade was more like Nifty just teasing the psychological 18K. Just go down there, just tease it a little bit, just tap, knock, and just bounce back. That's the kind of a intention it seemed like the index had in today's trade. So the psychological 18K mark, which we are considering as the first short-term support for the index, was almost tested with 18,008 being the intraday low, after which the index did bounce back and consolidated. So we are looking at a short-term consolidation after a pretty decent rally. This is a 75-minute time frame, by the way. We have two negative daily closes, which is nothing but a sign of a breather. We discussed this yesterday, right? When we have a sharp rally, it's obvious, it's meaningful, it's healthy that prices take some breathers. And what we are going through right now is that. A breather is a consolidation, short-term consolidation, is good for the health of the uptrend. The issue begins when this kind of a short-term consolidation correction goes deeper. Then the uptrend gets challenged, maybe reversed, volatility comes in back to the market, trading becomes difficult, stop losses get hit either side of your trades. So I don't know whether that will happen or not, but as of now, the trend is intact. The momentum is slowing down a bit, which is fine. We should be okay with it. And as long as our psychological 18K mark is being protected and respected, strategically, we should maintain a bullish bias on the overall markets and not create any hasty short positions as of now. What about Bank Nifty? Yesterday we mentioned that Bank Nifty seems a little wobbly and there are back-to-back couple of divergences. We've got some signs of momentum slowdown, very, very evident on the 75-minute time frame. And if yesterday's low was broken, we can expect a little bit of slip for the index. Now what happens and what happened today is that index opened itself pretty low. You know, these kind of corrections, these kind of down moves are required for some momentum headroom. The momentum indicator needs to slip a little bit down so that it creates headroom so that it can continue to go up. What happened today is the index opened down itself rather than opening flat and trading down. It opened down and bounced back. So what? What this means is that expected retest on the downside is done with. So this possibility of a downslide is slowly getting kind of dissipated. It's losing its essence. That's number one. So the kind of expected correction, bearishness that this particular chart suggested me last evening, it kind of slipped at the very open and bounced back, and so that bearishness is slowly giving away. And today's low becomes a very important level for any kind of serious correction from here on. Today's low is this one, which is 41,000, clearly has some level of importance, and so you can blindly use 41,000 as the immediate short-term support, below which the trend gets questionable, maybe reversed, etc., etc. So as long as 18K for the Nifty and as long as 41K for the bank Nifty holds, short-term traders should be looking more towards long positions. Now, amongst the sectoral indices in today's trade, right from the very beginning, the damage came in from the IT pack. Right from the very beginning itself, especially large caps like Infosys and TCS. And if we take a look at the top 12 stocks that makes up the Nifty, we can clearly see that it is Infosys, which was the biggest loser, and one notch lower it is TCS, which was down 4%. I would take a little bit of extra time tonight and talk a bit closely in detail about what's happening with Infosys. Let's take a look at the weekly chart first, and we can see that Infosys is going through yet another important, meaningful bounce back from meaningful intermediate supports. The last time we had the bounce back, if we use an info line, from a low to high basis, it was around 19.5%, 20% bounce back. The bounce back that we are on right now is around 16.9%, 17%. Last time it lasted for around 8 weeks. We are around 5 weeks now on a low to high basis. So we're more or less there. It's it's there. It's doing pretty good. Now, is there any further headroom? I think so. We will take a look at it a little more closely. So going by the weekly charts, clear signs of support, immediate obvious resistance that comes in at 1640, 50 kind of levels. So is the index making not a very clean looking double bottom, but a double bottomish kind of a behavior? I don't think so, because if this is a double bottom, it takes so many weeks and the downtrend is not much big enough, right? So this is not a very good double bottom. In fact, I don't think it is a double bottom. But what I think is, keeping in mind the kind of peak and trough divergences that I have noticed on this particular weekly chart of Infosys, the way last time prices gave away, this time I don't think it's going to happen. I think the stock is just going through a healthy correction, which can retrace down towards sub 1500, and then it will be more interested to rally rather than give back. Now, this is what I sense, I feel, I anticipate. It's not that it's going to happen. If it happens, then my reading goes right. Now let's come to the daily chart. And first, what I'm going to do is I'm going to draw a fixed volume profile from the recent low to the recent high. Just want to see how did the volumes play out in this run up. And we can see that a pretty decent, or the point of control was down here, is down here. And the next meaningful chunk of volumes happened here, which is around 1480, 1490, 1497. So there you go, 1500 to 1480 this. So even if we see a further dip from this large cap index heavyweight, then even towards 1500 or sub 1500, if it teases 1500, one should be expecting supports to hold for a bounce back. That's my view. I'm not going to go bearish or short the stock, but be looking to buy at supports. Now, whether it will go all the way down till 1500 or not, that is need to be seen. It's 1535 right now. So I would continue to maintain a bullish bias. 1480, 1500, I think should be the worst case scenario for this correction. If that happens, it will correct a little less than a 50% of this move, which is fine, which is healthy. The 75-minute time frame, however, has rolled down. The 75-minute time frame momentum has also gone bad. So it's going to be a little difficult to pick the point of entry of a long trade from the 75-minute time frame right now. We need to give the stock a little bit of time. I feel that this low, which is a little below 1520, and we just spoke about 1500 and 1480. So I feel that if prices comes down somewhere here and starts to make some kind of a base formation, that is where we can look to initiate some kind of a long trade if there's enough technical rationale. So Infosys, TCS, I feel that it's just a short-term correction, and the recent bounce back in both the stocks are fairly strong and should hold. If it fails to hold, it will be tragic for both the stocks as well as the entire CNX IT pack. But to wrap up today's view, Nifty just loses a bit of momentum to create headroom. It has shown resilience and bounced back. Underlying trend is still up. Momentum seems to be fine, and strategically one should continue to look for long trades. Tomorrow is the final day of the week, so trade accordingly, trade carefully, take care of yourselves, trade well, and trade wise.